Hello again, this is Ma'am Buen. So we're done with the first two steps of our accounting cycle, and that is analyzation of a business transaction, and the second one is recording the business transaction, or what we known as journalization. So we are now on the third step of accounting cycle, and that is posting to the general ledger. So let us have our problem. Alexi Clara is a painting contractor. During the month of March of the current year, she completed the following transactions. So what is the requirement in our problem? That is, the first requirement is we have to journalize the above transaction using the following account titles, and that is cash, accounts receivable, we have painting supplies, prepaid insurance, we have painting equipment, service vehicle, motor notes payable, we have accounts payable, we have Alexi capital, Alexi withdrawal, painting revenues, we have wages expense, utilities expense, and maintenance expense. The second requirement is open the account and post the entries on it, and the third one, prepare trial balance. So we're going to have the next two steps in our cycle, that is posting to the general ledger, and after that is preparation of trial balance. Okay, let us have the first requirement, journalize the transaction. So I have already the journal entries. Okay, so we have the first transaction, March 2, invested in the business a service vehicle valued at 80,000 and placed 70,000 in a business checking account. So our entry March 2, that is debit cash of 70,000, another debit service vehicle of 80,000, and credit Alexi capital 150,000. The second transaction, March 3, acquired painting equipment costing 50,000, paid 10,000 cash, and signed a note for the balance. So our entry, debit painting equipment 50,000, credit cash 10,000, and another credit notes payable 40,000. March 4, purchase painting supplies 3,200 cash. So March 4, that is painting supplies 3,200 and credit cash 3,200. March 5, receive 4,800 cash for painting an apartment room. So debit cash 4,800 and credit painting revenue 4,800. Then we have March 7, completed a painting job and billed the client 1,500. Then we have March 7, debit accounts receivable 1,500 and credit painting revenue 1,500. Okay. March 10, purchase painting supplies on account 1,600. So we have March 10, debit painting supplies 1,006 and credit accounts payable 1,600. Next, 11, receive a check representing full payment from the customer billed on March 7. Okay, 11, debit cash 1,500, that was from this transaction. So debit cash 1,500 and credit accounts receivable 1,500. Then we have 12. March 12, paid 4,000 for an insurance policy for 1 year coverage. So that is 12, debit prepaid insurance and credit cash 4,000. We have 13, billed a customer 6,200 for a painting job. 13, debit accounts receivable 6,300, 6,200, and credit painting revenue 6,200. We have 14, Paid the assistant 1,500 for 3 days work. Okay, let me read it again. Paid the assistant 1,500 for a 3 days work. So, 14, debit wages expense 1,500 and credit cash 1,500. Then we have 15, paid for 400 for a tune-up of the service vehicle. So, 15, debit maintenance expense 400 and credit cash 400. Then we have 18, paid the painting supplies purchase on March 10. So, entry, debit accounts payable and credit cash 3,600. I mean, it is 1,600 only. Then we have 20. Purchase a new ladder for 6,000 and painting supplies for 2,900. So, 20. Debit painting equipment 6,000. Another debit painting supplies 2,009 and credit cash 8,900. Then we have 23. Receive 3,300 in cash from the customer billed in March 13. Okay, so debit cash 3,300 and credit accounts receivable 3,300. Next, March 24. Transfer 3,000 to a personal checking account. So we have March 24. Since this is another page, that is why we have to write again the month. So March 24, our entry, debit Alexi, withdrawal 3,000 and credit cash 3,000. Then we have 25, billed a customer 3,600 for painting a 2-room apartment. So debit accounts receivable 3,600 and credit painting revenue 3,600. We have 27. Paid 20,000 on the note signed for the paint. Paid 20,000 on the note signed for the painting equipment. So we have debit notes payable 20,000 and credit cash 20,000. 29. Paid the assistant 1,008 for a 4 days work. So debit wages expense 1,008 and credit cash 1,008. And the last transaction, receive full payment from customer billed from March 25. So debit cash and credit accounts receivable, that is 3,600. Okay, so after our entry, the next step is posting to the general ledger. So that is what we're going to do next. This is how a general ledger looks like. So we have the date column, we have particulars column, we have F, this is folio, and we have debit. Then we have date again, particulars, F column, and we have credit. But for purposes of discussion, we're going to use T account. Remember, T account is a scratch of a ledger. And this is how a T account looks like. It looks like a T. That is why it is called T account. Okay, so let us open T account for our accounts that we're going to use. And here it is, the list. Okay, so we have the first one. We have cash. We have cash. For the T account of cash, make sure that you have a long vertical line because there's plenty of transaction that involves cash, so you're going to have plenty of transactions to be posted in your cash ledger. Okay, next is accounts receivable. Next is painting supplies. Then we have prepaid insurance. Next is painting equipment. Next is service vehicle. We have notes payable and accounts payable. Then, Alexi Capital. We have Alexi Withdrawal. We have painting revenues, wages expense, utilities expense, and maintenance expense. And maintenance expense. Okay, so let us now start posting our entries. So we have our first transaction, March 2, debit cash. So let us look for the T account of cash. Here is the T account of cash. So we are going to post our first entry. That is debit cash. So here is the ledger or T account of cash. It is debit. So we have to post it on the debit side. Let us write the month. March 2. And that is 70,000. So again, let us write it on the debit side of the ledger. Okay, 70,000. Next is another debit, service vehicle. So let us post it in the T account of service vehicle. This one. Okay, so we have again, that is the first amount. So we have to write the date, the month, March 2. And then the amount, what is the amount? That is 80,000. So we have 80,000. Okay, it is on the debit side because the entry is debit service vehicle. And then credit Alexi Capital. So let us go to the ledger of Alexi Capital. Okay, here is the ledger of Alexi Capital. It is credit Alexi Capital. So we have to post it on the credit side. So we have 150,000. Let us write the month also. Okay, so credit 150,000 on Alexi Capital. Okay, then we have the second one, debit painting equipment. So let us look for the painting equipment. Here is painting equipment. So our entry is debit painting equipment 50,000. So on the debit side of painting equipment, this is the debit side, this is the credit side. On the debit side, we have 50,000. So again, since that is the first entry, so that is March 2. Then credit cash 10,000. Credit cash 10,000. So let us have the cash ledger again or T account. So we have 10,000. That is March 3. Since this is the first posting, take note, when we post on the other side, you don't have to leave space or unlike in your journal entries. Okay, so credit cash of 10,000, then another one is credit notes payable 40,000. So on the T account of notes payable, we have notes payable, that is credit. So it is on the credit side, that is 40,000. That is March 3. Okay. Then, for March 4, painting supplies debit. So, we have painting supplies here. So, this is debit painting supplies, 3,200. So, we have to post it on the debit side of the ledger or the account of painting supplies. So, that is 3,200. March 4. And credit cash, 3,200. Again, it is credit cash, 3,200. So, it is on this side, 3,200. It is dated 4. So, we have to write the date only. Okay. March 5, debit cash of 4,800. So, we have debit cash 4,800. That is March 5. Okay. So, March 5, debit cash 4,800. And credit, painting revenue. So, let us go to the ledger or the account of painting revenue. Painting, this one, painting revenue. It is credit painting revenue. So, it is on the credit side. So, you have 4,800. March 5. Okay. And then, March 7, debit accounts receivable of 1,005. Accounts receivable. Debit accounts receivable. So, here is the T account of accounts receivable, March 7. March 7, that is 1,500. So, 1,500. Okay? And our credit is painting revenue. Again, let us post it in painting revenue. 1,700. Credit. So, it is on the credit side. And that is March 7. Then, we have March 10, painting supplies of 1,600. So, again, we have painting supplies. March 10, painting supplies. That is 1,600. And credit, accounts payable. So, we have to post it on accounts payable. So, credit, 1,600. That is March 10. Okay. Then we have 11, March 11, debit cash of 1,500 and credit accounts receivable, 1,500. So, debit cash, that is March 11. March 11, 1,500. And credit, accounts receivable, 1,500. That is March 11. Okay. And 12, debit prepaid insurance. So, we have prepaid insurance. It is debit side. So, debit 4,000. Debit 4,000. Okay. What is the date? March 12. And credit cash 4,000. So, credit cash 4,000. That is March 12. Okay. Next is debit accounts receivable 6,200. Again, here is our accounts receivable. Accounts receivable 13. Debit accounts receivable 6,200. Debit. That is March 13. Okay. So, March 13, debit, accounts receivable, 6,200. And credit, painting revenue. So, credit, painting revenue, that is 6,200. So, credit, 6,200. That is 13. Okay? And we have 14, wages expense. Debit wages expense. Here is our T account for wages expense. So, debit 1,500. That is March 14. Okay. So, March 14, debit 1,500. And credit cash 1,500. So again, on the cash ledger or T account, credit 1,500. That is March 14. Okay? So again, credit 1,500 and credit and the date is March 14. Okay, the next one, we have maintenance expense. So, debit maintenance expense. That is 400. Here is our T account for maintenance expense. So, that is 400 debit. So, we're going to post it on the debit side. And the date is March 15. Okay. So again, our entry, debit maintenance expense, 400. So we post it on the T account of maintenance expense on the debit side, 400, dated March 15. And credit, cash, 400. So credit cash, 400. That is 15. Okay, next. 18. Accounts payable, debit accounts payable of 1,006 and credit cash 1,006. So, here is our T account of accounts payable, debit accounts payable. So, it is on the debit side, 1,600. The date is March 18. Okay, and credit cash. So, let us go to the T account of cash. Okay, here is the T account of cash. So, it is credit, credit cash of 1,600. So, we have to post it on the credit side of cash, 1,600. That is March 18. Okay. 20. Debit painting equipment. So, we have painting equipment T account. So, another entry, another posting, that is March 20. Debit 6,000. And another debit is painting supplies for 2009. So again, painting supplies, we have dated 20, 2,900. Okay, debit painting supplies and debit painting supplies 2,900. And credit cash of 8,900. Okay, so let us post it on the T account of cash. So this is cash. So credit cash 8,900. So credit cash 8,900. That is dated 20. Okay. And we have debit cash of 3,300 and credit accounts receivable. So debit cash. Okay. So again, on the debit side, that is 3,300. That is dated 23. And credit accounts receivable. So accounts receivable credit side, that is 3,300. Okay. So the next entry, so we have credit Alexi or debit Alexi withdrawal 3,000 and credit cash of 3,000. So we have to post it in our T account of cash on the credit side. So we have 3,000. That is March 24. Okay. By the way, we haven't write the date for Alexi withdrawal. So we have to write March 24. Okay. And the next entry, that is debit accounts receivable 3,600 and credit painting revenue. So let us post the transaction on the accounts receivable. Okay, here is our ledger or T account of accounts receivable. So debit, so it is on the debit side. Debit accounts receivable 3,600. That is dated March 25. And then credit painting revenue. So credit painting revenue of 3,600. If you have noticed, painting, all the posting on the painting revenue is on the credit side. If you can still remember when we discussed journal entries, withdrawals is always on the debit side, capital is on the credit side, expenses are all debit side. So if you are posting and you have a posting on revenues on the debit side, it means you are wrong. Okay, so that you can still have the guide, our guide in preparing the journal entries. So we have, again, we have painting revenue of 3,600 and that is dated March 25. Okay, the next date is March 27. Our entry, debit notes payable and credit cash. So let us have notes payable. Okay, so debit notes payable, that is 20,000. And that is March 27. And credit cash 20,000. That is 27. Then we have 29, wages expense 1,800. Wages expense 1,800. And that is 29. And credit cash 1,800. So again, credit cash 1,800. That is 29. And we have the last entry, debit cash 3,600, credit accounts receivable. So debit cash 3,600. That is 31. And credit accounts receivable, credit, so it is on the credit side, 3,600. Okay. So we're done with posting. Take note, in our guide, in your journalization, I said that only assets and liabilities have debit and credit because they were affected, increase or decrease. That is why, take note, in our ledger or T account, it is only assets that have postings both on the debit side and on the credit side. Like cash, accounts receivable, we have liabilities of notes payable, prepaid insurance, since we had also accounts payable. But for expenses and withdrawal, it is only debit. That is why for wages expense, we don't have utilities expense, maintenance expense, and withdrawal, it is only debit side. While for revenues, capital, or equity, we only have credit posting or credit side. Okay? So, after posting our entries, we have to get the balance, total debits and total credits. Okay, and that is what we call posting. So we have 70,000 plus 4,008 plus 1,500, 3,300. That is 83,200. This is footing. Okay. Let us check it again. 70 plus 48 plus 15 plus 33 plus 36. So that is 83,200. Then let us have the credit side. We have 10,000 plus 324 15 plus 400 plus 16 plus 8,900 plus 3,000 plus 20 plus 18. That is 54,500. So, since, okay, total debits is 83,200 and total credits is 54,400. It is 54,400. Let us check it again. That is 10,000 plus 3,200 plus 4,000 plus 15 plus 400, 1689 plus 3,000, 20, 18. So that is 54,400. This should be 400. Okay. The total debits is 83,200 and total credits is 54,400. So we're going to get the difference between the two columns. So since debit is bigger than the credit, so we're going to deduct the smaller amount, which is the 54,400. So minus 54,400. Okay. So, we have 83,200. Our balance is 28,800. Okay. We have to double rule. Again, total debits is 83,200. Total credits is 84,400. So we have to get the difference between the two columns. We're going to deduct the smaller amount against the bigger amount. Our smaller amount is 54,400, so we have to deduct it from 83,200. So the balance is cash balance is 28,800 debit. If you can still remember, cash and asset has a normal debit balance. So the balance of all assets should be on the debit side. Okay, let us now have accounts receivable. Again, this is an asset. So we have 1,500 plus 6,200 plus 3,600. So 11,300. And on the credit side, that is 1,500 plus 3,300 plus 3,600. So that is 8,400. Again, we have to get the difference, 11,300 minus 8,004. We are going to deduct 8,004 against 11,300 because 11,300 is a bigger amount. So that is minus 8,400. So that is 2,900. Again, this is an asset. So normally, the balance should be on the debit side. Then we have painting supplies. So 3,200 plus 1,600 plus 2,900. That is 7,700. Since we don't have any posting on the credit side, it means this is already our balance. Okay. So, for prepaid insurance, we only have one posting, so that is our balance already. And since this is an asset, so that is why it is on the credit side, 4,000. For our painting equipment, we have 56,000. For our painting equipment, we have 56,000. For service vehicle, we only have one posting, so that is already our balance. And it is also on the debit side, since it is an asset. Then we have notes payable. We have 20,000 and 40,000. So this time, the credit side is larger than the debit side. So we have to deduct the smaller amount. So minus 20,000. So we have 20,000. Take note, this is already liability. And what is the normal balance of liability? It is credit. That is why the balance of our notes payable is on the credit side, 20,000. And accounts payable, we have debit of 1,006 and credit of 1,006. So we don't have balance anymore. Zero balance. And we have Alexi Capital. Since we have only one posting, so that is our balance. Also, Alexi Withdrawal, we only have one posting, which is on the debit side. And for our painting revenues, we have 4,800 plus 1,700 plus 6,200 plus 3,600. So that is 16,300. Okay. For our wages expense, we have two posting on the debit side. That is 1,500 plus 1,800. So that is 3,300. And we have maintenance expense of 400. Okay. Take note again. Alexi Capital is credit because that is credit balance account. Also, painting revenues, that is also credit balance account. So that is why it is credit on the credit side. Take note, there's no posting on the debit side. Also with Alexi Capital. Alexi withdrawal, debit only. There's no posting on the credit side. Also with all the expenses, it is only on the debit side. Okay? Now, let us have the next step after posting, which is preparation of trial balance. So, in trial balance, we're going to summarize the open accounts in our ledger and their balances. So, here is our, this is where we're going to prepare our trial balance. Of course, we have our heading, that is Alexi Clara. Trial balance, that is March 31. Okay, let us just leave the year. So we have our account titles. We have debit and we have credit. Okay, so let us list down our accounts. The first one is cash. So we have cash. The balance is 28,800. That is debit. So it should be on the debit side. 28,800. Then we have the next one is accounts receivable. So we have accounts receivable. The balance is 2,900. It is on the debit side. So, 2,900. Next is painting supplies. Balance is 7,700. Debit. So, 7,700. Next is prepaid insurance. That is 4,000 debit. So, it is still on the debit side, 4,000. Next, painting equipment. So, we have painting equipment. That is 56,000. Next, we have service vehicle. That is 80,000. Next is notes payable. Take note, notes payable balance is 20,000 on the credit side. So, it is on the credit side, 20,000. And another one, accounts payable. 0. So just leave it 0. Then we have Alexi Capital. That is 150,000. So it is on the credit side. 150,000. Then we have Alexi withdrawal. This time, Alexi withdrawal is on the debit side. So again, you have to write it on the debit side. And we have painting revenues. That is 16,100. Again, it is on the credit side, 16,100. Then we have wages expense of 3,300. Again, it is on the debit side, so 3,300. Then we have utilities expense. Just leave it blank. And we have maintenance expense of 400 debit. Okay. By the way, the painting revenues here, I made some correction. This 1,500 because that is March 7 transaction and that is for accounts receivable. That is March 7, this one, 1,500 and credit 1,500 for painting revenues. Okay, so let us now get the balance of our trial balance. So we have 28,800 plus 2,900 plus 7,700, 4,000, then 56,000. Then we have 80,000, then 3,000, and 3,300, 400, 186,100. Okay, on the credit side, we have 20,000 plus 150,000 plus 16,100. So that is 186,100. Okay. So the total debits should be equal, balance with the total credits. And that is, their balance is 186,100. Balance. And double rule. Okay. So we're done with the up to 4 steps in our cycle. The first one again is an analyzation of the business transaction. Then we have the journalization. Then posting, that is what we have done today. And after posting, we have the trial balance. Okay.